Hello friends and welcome. You are with Deepak R. Khemani and we are in this 2 minutes money and personal finance show. One of the biggest changes in the tax system, the way we calculate our tax and pay it, has happened in this budget. You have now been given an option of paying lesser taxes if you do not take any of the deductions. Now, most of investors have the habit of taking these tax deductions, which forced them to save. So you have ATC, you have ATD, you have so many other Section 6 and Section 80D exemptions which most people utilize. So the most famous one obviously is ATC, where you can invest in an LIC policy, in national savings certificates, in 5-year bank FDs, in ELSS. ATD goes for Mediclaim. There are home loan interest payment and then capital payment. So many other deductions are there. Now you have an option of paying lower taxes and not taking any deductions, or taking your deduction and paying slightly higher taxes. Now this is a little bit tricky. It depends on where your income is and how much your income is. Some calculations say that if you are above the 15 lakh tax slab and you are utilizing all these exemptions, it may actually make sense to move to the newer tax regime where you will finally end up paying lower taxes. Now, I think it is not as easy to understand this. If you are filing your returns on your own, my suggestion would be to sit down with a tax consultant, somebody who does your tax planning, who can plot down the comparison between how much you would pay if you take all the deductions, if you do not take the deductions. Also, there was some confusion whether if you move to the new system, whether it can be moved back to the old system. So for this year or the next few years, you do not have any deductions. Can you take the new system and 2 years later or 3 years later, if you decide you want to take these deductions, can you move back?